Hi, this is David. I'm looking at the NQ15 minute chart for the 21st and 22nd of January. Looking to go short because I've got my hourly DP zones above me here, and I have a 5-wave pattern terminating right in the 15-minute DP zone and just below the hourly DP zone. You can see I have my entry just below this red bar, my stop above the red bar, and my target for a 2.4 R is just in this region here. And then you can equally go on to see that the price came down in a clear ABC. I've now went off to make a 5-wave up against me and took me out for a 1R loss. That's okay. So I've got her there. I have a net minus 1R loss. Minus 1R. Excuse my typing. So moving on from that and moving up to the 23rd of January, you can see the price has made some further progress to the upside and is falling just short here of the 60-minute DP zone again. But what I particularly like about this is I'm always looking for entries that are in this region here, which is a nice retrace of the previous downswing. And if I put my Fibonacci tool on there, you'll see that that is a 786 retracement of the previous downswing. So at that point, I'm very interested in looking for another short entry because I believe the price is now got more downside potential here than upside because of the DP zone up top. So what I check out here then is I've looked out and I've got on the 15-minute chart I'm looking at a 1, 2, 3, 4, 5 wave down. I've got a very clear ABC. So in this area here I'm very interested in an entry, particularly as it's at this 15-minute DP zone 2. Now I'm just going to zoom into that area a little. And I'd like to try and show you, no, I prefer to come out, to try and show you what really was interesting to me on this chart. To start with, I have a 5-wave pattern down, but I also have another pattern that I'm always on the lookout for, a pattern I really like. And this is known in Gartley and butterfly terms as an AB equals CD. And basically, this is my A leg, and that's from the point of A to point B. Then I get a retrace, which is a clear ABC retrace. A, B, C. Now, when I get that type of retrace, I'm looking at the Fibonacci extension ratios, and you'll see that if I put my Fibonacci extension tool on this, that the AB leg of this ABCD pattern, the CD leg is equivalent to 786 of the AB leg. It's in between the 786 and 100%. So I've got some nice symmetry of price, and I've got some nice symmetry of time in the same place. That then leads me to believe that what we're seeing here is a formation of an AB equals CD, in which case I will make a copy of that, paste it, and I will move it down there. And that's telling me that I'm going to be looking from this point, if there's a suitable entry point, to go short with a view to my target being somewhere down at the 3605 area. So I monitor the price action, and what do I get? I get a very nice bearish looking candle there. So I'm going to take my entry and stop there, with my target at the just short of the equal legs of the larger A, B, C, D. And as you can see, when I do my trade analysis, setup analysis, I get my entry at the bottom of this bar when the price breaks that, my stop above the high of the recent high, and my target just shy of the AB equals CD down at the bottom here, which shows me a potential for a 4R trade. And that's all I have to do. Basically, I place my entry, my stop, my target, then I monitor the price action to see how we progress. And as you can see, the price continued down, bit of a retrace, and then boom, all the way down to the target. Now you can also see that it went way past my target, but of course in my system I don't worry about how far it goes after the price has hit my target. What I worry about is at the time of entry, what is my potential profit? Is it an acceptable risk to reward ratio, and is it a high probability trade? And in this case, in my view, these are definitely high probability trades and something you should be looking at if you're into trading any kind of geometrical patterns. So in summary, you can see that I have a failed trade and a winning trade, and the important thing is that my winning trade was bigger than my losing trade, and that's a very, very important point. My winning trade was bigger than my losing trade, producing me a net plus 3R. That's 3 times my risk was my reward net over my 2 trades. Hope you enjoyed the video, and I will hopefully record another one very soon. Take care and happy trading.